Hello everyone, and welcome to today's financial report. Let's start with the overnight action on Wall Street. The three major indices finished basically flat, with the Nasdaq at 26,690, the S&P 500 at 7,757, and the Dow at 54,036. But here's the key takeaway: the S&P posted its biggest weekly gain since April and set another record high. That's a strong signal. Pre-market futures were flat across the board, showing no directional divergence. Now, a few stocks really stood out. Atlassian surged 35% in 2 days and over 43% in 5. We verified the numbers. On August 6, after the close, they reported revenue of $1.77 billion, up 27.6% year-over-year, with adjusted earnings per share of $1.87, well above the $1.50 analysts expected. Their next quarter guidance was also strong. The core drivers are faster cloud adoption and rapid deployment of their Rovo AI product. But honestly, after a move like that, the risk-reward for chasing at these levels is not great. Doximity jumped 32% in 2 days and 26% in 5. Management disclosed on the earnings call that their AI search product is already profitable, generating more than 10 times revenue per search compared to its cost, and they raised full-year guidance. But here's the catch: about 17% of the float was sold short before earnings, so there's a clear short covering amplification effect. The sustainability of this move is questionable. Twilio rose nearly 25% in 2 days. Second quarter adjusted earnings per share came in at $1.47, beating the $1.32 estimate. Revenue hit $1.5 billion, also above expectations. Management raised full-year guidance and emphasized that their AI-driven customer engagement platform is entering a new growth phase. The broader picture is clear: AI commercialization is the dominant theme in overnight trading. Capital is willing to pay a premium for verifiable AI revenue and profits. ARKK was up 4.68%, Tesla gained 2.53%, Nvidia was up 2.07%, and growth sentiment is broadly positive. Let's turn to the macro landscape. The 10-year Treasury yield is at 4.66%, up slightly from the previous day. But the VIX is only at 14.9, so there's no real panic in the market. The elevated yield is more about growth expectations than tightening fears. However, if we break above 4.75%, that would signal a marginal liquidity tightening and would pressure high-valuation tech stocks. The dollar index is at 99.6, in a weak range, which provides external support for emerging market assets and RMB-denominated assets. Oil is ticking higher, with WTI at $78.18. Gold is at $4,340, still up 5.36% over the 7-day window. The strong trend remains intact, driven by a weak dollar and rate cut expectations. So here's our assessment: the risk-on window is still open. What would invalidate it? If the VIX crosses back above 17, or the 10-year yield breaks above 4.75%, either one would flip the risk sentiment and warrant reducing positions. On the currency front, the onshore RMB is at 6.7482, offshore at 6.7425, both firmly below the 7 level and roughly flat over the past week. A stable and relatively strong RMB, combined with a dollar index below 100, favors foreign capital inflows into A shares. On trade and tech restrictions between the US and China, there are no new verified developments today, so related sectors remain on hold. What about today's A-share market? We expect a higher open. 2 reasons. First, U.S. tech strength overnight, with Nasdaq futures flat pre-market and no negative signals. Second, the RMB is firm, the dollar is weak, and the VIX is low, all pointing to improved foreign risk appetite. But keep in mind, the Shanghai Composite was already up 1.02% yesterday, and the Chinext rose 1.35%, so there's some profit-taking pressure. Whether the higher open holds depends on volume. The invalidation trigger would be the offshore RMB quickly breaking above 6.76, or Nasdaq futures turning down more than 0.5% after the open. Sector-wise, the first main line is semiconductor materials and equipment. AXTI, a U.S. supplier of indium phosphide substrates, jumped 17.84% in 2 days and 29% in 5, reflecting strengthening demand expectations for high-speed optical communication upstream materials in AI data centers. The second main line is electrical equipment. This sector has appeared in our hotspot radar for 5 consecutive sessions, directly tied to data center power supply demand for AI computing infrastructure. Both lines share the same logic: AI capital expenditure is transmitting to the upstream supply chain. On the risk side, be careful with high-level optical communication and AI computing names that have already had big catch-up moves, especially those with concentrated institutional holdings and short-term gains exceeding 40%. Those are not worth chasing today. Northbound capital is more likely to see net inflows, but if we see sustained net outflows for more than 30 minutes after the open, that would signal disagreement among foreign investors about current valuations. On individual names, TWLO is worth watching, with a 55% probability of either fading from highs or consolidating, within a 1 to 3 day window. Position discipline says don't chase, wait for a pullback, and test with a small position. For COHR, we suggest taking profits in stages. The catch-up progress has reached 59%, and top institutions are reducing rather than adding, so chips are loosening. AKTS should be avoided entirely. Short interest is at 82%, and in a corrective market environment, it's highly vulnerable to short attacks. Don't participate in any rebound. Here's our one-sentence core judgment for today: a weak dollar combined with better-than-expected US AI earnings keeps the risk-on window open. A shares should open higher and trade in a firm range, with focus on semiconductor materials and electrical equipment. Probability assessment: 40% up, 40% sideways, 20% down. That's all for today's program. Thanks for watching, and we'll see you next time.